In today's video, I'm going to show you a must-watch level on the SPX this week, including a trade setup that could materialize from that level, and also an update on the US dollar index, the DXY. Okay, hope you guys had a great weekend. So looking here at the SPX, and before I get into this, do know that we have inflation data this week. We've got CPI tomorrow and PPI later this week. So, here in the US, it's going to be a fairly active week, especially compared to last week. So keep that in mind that is going to affect a market like the SPX, the S&P 500. So we are going to see some volatility here starting within the next 24 hours for this market. Now, if you guys saw last week's video, what we were watching for was a move up here into this buy side liquidity based on this October high. So in that video, I said that I did not want to short this market until we saw it retest 44.20, which we saw on Friday. Now, I did not think that we were going to get that move on Friday. I was looking for, ideally something this week, consolidation down here and then a wick up toward this level for that short trade. But of course, the market had other plans with that Friday candle retesting 44.20. Now, the reason that was significant is because you can see we've got the low from right back here, but also, as I mentioned last week, we've got this big red candle. This candle body was never retraced following this sell-off. Now you can see this candle was retraced through this area. However, this one up here was never retraced during October. So there was a lot of buy-side liquidity that built up above these highs, and areas like this tend to serve as magnets for these markets. So that's why I was looking for a move into this area sometime this week, which we're clearly getting. Now, let me show you the key for this week, and this is really, in my opinion, going to determine whether we see the SPX continue higher following that inflation data, potentially up here toward this candle, right, to fill in some of this inefficiency that developed back here on this candle, or if we get the rotation lower from this resistance area. But before we do, I am still running a discount, guys, on the VIP group. So the 50% discount from last week is over. However, there is a 30% discount on monthly, quarterly, and lifetime options going into next month, which I will be launching a course next month. So gearing up for that, I am running a 30% discount. See the link at the top of this video. If you guys want to join, you're going to get daily videos on 5 to 10 markets. You're going to get exclusive charts and setups. You're going to see my trades in real time. And you're also going to get that course that launches next month. So here's what this is going to come down to, in my opinion, for the SPX. Now, if we look at the 4-hour time frame, this is going to be incredibly important, in my opinion, as we head into that inflation data. So obviously you can see that right back here in October, we had the 4-hour close here. We had this wick. And then notice what happened last week. We got the, once again, 4-hour close right through here. Now look at what's happening so far on Friday and so far this week. We've got this level right around 43.96 or so, 43.95 in that area. This area is currently serving as support. So this right up here is going to determine whether this is the market basing above this area for that next leg higher up toward that candle I just mentioned, or if we are going to get a fake out, okay, a close back below this area for a short setup. Now, the way that's going to look is following inflation data. Remember, we do have volatility coming up here over the next few days. So if we were to get following that inflation data, consolidate up here into that data, and then a close back below this, okay, a 4-hour close back below this, especially a daily close back below, this area becomes resistance, and we likely see that move lower down here toward these lows, because once again, there is a lot of liquidity down here, a lot of sell side liquidity that the SPX could target if we do get that confirmed fake out. But it's important to note, though, that as long as the market is above this area is serving as support right now. And speaking of liquidity, okay, in areas of inefficiencies here for the SPX, there is no shortage of inefficiencies and liquidity to target if the market does decide to take out this low here today. So again, if we see later this week the close back below here, sustained break, we've got liquidity sitting below these lows, and we've got inefficiencies like these candles. Okay, this breakout candle down here was never retraced. Same thing right here with this candle. So this could serve as magnets for the SPX if we do get that confirmed break below that 43.95 area. But again, alternatively, if we see the SPX head higher after that inflation data, start to base above 44.20, okay, start to base up here, then in my opinion, we are headed back here toward these highs, or at least back here toward this candle to fill in that inefficiency right around 44.50. Okay, so I think that 43.95 is going to be the level to watch this week, especially following that inflation data. Now, let's take a look at the DXY, the US dollar index, to see how the dollar is shaping up, because that's going to affect a market like SPX, because the two do tend to move inversely to one another. So looking at the DXY, obviously very sideways, it has been ever since the start of October. But the one thing I do want to focus on today is that you can see here, okay, 2 weeks ago, we had the close below 105.60. So you can see back here, it was a pivot, resistance here, resistance again. And then throughout October, the market found this area as support. Now we got the close below. Last week closed right back above. So conflicting signals right now for the DXY. It did look like we were going to get a breakdown, which we did, okay, and follow through for the dollar down here towards some of these levels. But instead, what we saw is last week closed right back above this area. Now, so far this week, you can see where 105.60, this area is serving as support, but it's going to depend on what happens with that inflation data this week in terms of, can the dollar stay above this and target areas like this inefficiency back here from this candle following FOMC, okay, and also potentially that upper wick from FOMC, or do we get the sustained break back below here, and then that opens up those lower targets? Now, I do kind of tend to think, though, that with last week closing back above 105.60, I mean, if the dollar was going to rotate lower, it should not have closed last week back above this area. So as of right now, that is bullish for the dollar. But again, it's going to depend on that inflation data this week. All right, so really interesting stuff here for these markets. I tend to, lean on the side of bullish dollar, potential fake out here from the SPX. I also think that offers the best risk reward ratio. And like I said, you do have areas of liquidity like below this low here to target, as well as those inefficiencies from this very aggressive rally in November. And furthermore, like I mentioned last week, I'll discuss this here before we wrap up. This is a descending broadening wedge, and you can see where the market is technically at resistance. Now, it looks like it's holding above. However, again, this could become a fake out. It's all going to depend on 43.95. And if we go back here, I showed this last week, but if we go back here and look at 2022, you can see where we have a very similar pattern, only much larger. So during this entire downtrend, this was a descending broadening wedge, very similar to what we're getting here. Just like I said, this is much smaller than what we had back in 2022. Okay, so very interesting times coming up here for the stock market and the dollar. If we see the dollar continue to base above 105.60 and start to rally this week, in my opinion, that's going to put pressure on the SPX, could give us that breakdown below 43.95 for a continuation of this descending broadening wedge, all right, over the coming weeks down toward levels like this, or we get the sustained break above here, a breakdown from the dollar, and we're targeting levels like this area up here. All right, so unclear as of now, but once again, 43.95 is going to be the level to watch in my opinion. All right, that's it for today's video. Don't forget to check out the link in the description of this video for 30% off monthly, quarterly, or lifetime subscriptions to the VIP group. That offer is only valid for a few more days. So if you do want my help with your trading, that's the place to be. Trade well this week, guys. I will talk to you again tomorrow.